Good afternoon, everybody. Great to be here with you today. Mike Trayborn here for Swing Trading. Hope you've been hanging in there in the markets. I know it's been a volatile few days. And by the way, tomorrow I want to talk about that a little bit as well. There's an expansion on some of these tariffs that are going to be occurring. I want to talk about that in the context of swing trading specifically. Want to look today at actually a bearish trade setup, as we also consider volume indications as well with our discussion. So look forward to that very much. I'm joined in the chat by a good friend of mine, Cameron May. Appreciate Cam being here. Hello to you, Jay Richardson. We've got Life in the Fast Lane, Ocean Life. Welcome all. We've got Beth as well. Folks, any questions, comments you have, definitely throw those in the chat so we can address those for you. And with that, if you are new to our class, we do look at a shorter term time frame, generally speaking, on the swing trades. If you are new, let us know. Love to welcome you to our class. All right, well, with that, let's get started with some disclosures to get going here. Information here is for general information purposes only. Options do carry a high level of risk. They're not suitable for all investors. Spread trading must be done in a margin account. Multiple leg option strategies do involve multiple transaction costs. Now, short options can be assigned at any time up to expiration, regardless of the in-the-money amount. An ITM option does have a higher risk of being assigned early. As it states here, a short put risk purchasing the underlying stock at the strike price when the market price of the stock will likely be lower. The paper money software application is for educational purposes only. Investing does involve risk, including loss of principal. There's no guarantee that execution of a stop order will be at or near the stop price, and past performance is no guarantee of future results. Now, an additional disclosure for today is that short selling is an advanced trading strategy involving potentially unlimited risks and must be done in a margin account. There is no guarantee. The brokerage firm can't continue to maintain a short position for any period of time. Your position may be closed out by the firm without regard to your profit or loss. Now, having said that, let's scoot on down into some of our additional slides here. Just a quick note on the bull flag as we look at it. One of the key sort of price patterns that we focused in on within our class, and that is a shorter term time frame. Normally, a 3 to 10 day move is what we're looking for here. You can see the construction of that flag. It's noted for a pull to the upside, a sideways consolidation, and a follow-through rally to the upside. It's really this area here that we in this class, as you've noted, if you've been here, many of you I know you have, really are focused in on this area right there. We can identify the pull, we can identify the flag pullback, but it's really kind of what's getting started here. You can see just by our diagram here, we've got a diagonal sloping trend line. Prices closing above it. They're also closing above the high of the low day. There's also a follow-through day after that. We might reach an initial target, which is the prior high, a target 1. A target 2 would be a full extension run about the length of the initial pull over here. So as this pull runs up this high, we could see another pull follow through roughly up to that level, as you can see over here on a full T2 target. But you can see, folks, still within that rally and that range, we're still looking at roughly, a 3 to 10 day time period. So 10 calendar days is basically 2 weeks. So really just trying to capture that push in the market up or down, I'll show you here in just a second, is what we're trying to time. As we've seen a number of stocks that when they do trend, they tend to go in this fashion, higher highs, higher lows, to make a higher high and a higher low. Well, within that, oftentimes there will be distinct and recognizable flag patterns. This is the bull flag, which is bullish. Obviously, we're looking at the upside, but the bear flag, which, by the way, with tariffs and what we've seen last week and a lot of concern, it's really uncertainty that drives a lot of the downward movement in the market. When it's market collectively speaking, it can be. I think it's that way in this case. You can see the pull listed here, shown here, a pretty big move down. And what was it doing? It began to retrace back up, counter trend, and then began to roll over. Now, sometimes when you close below the low of the high day, the low of the high day, well, sometimes you can get moving, and that can be an indication. We've also talked about moving averages coming in here as an indication. We'll talk about that. That's kind of one of the key points that we look at for trying to time maybe, a pullback here. But ultimately, still, 3 to 10 day pullback is what we're really trying to find on this setup. You'll notice that there was a longer-term pullback that unfolded here, maybe like a longer-term bull flag, but generally we're looking for 3 to 10 days. With that, all right, well, let's go ahead and take a look at the markets here. Now, before I wanted to dive into the market specifically, I want to talk about tariffs and really do some tariff talk because this is kind of, it's really quite unusual. President Trump did have tariffs in his first term. They weren't as extensive. President Reagan had tariffs, and they weren't as extensive as what we're seeing right now. Now, just some news on that, and I think many of you know this, but I just got this news today. I wanted to make sure you all had it. But so there's approximately 70 countries that have been or are currently in negotiating tariffs with the U.S. right now. So that was announced yesterday. That one of the heads within the administration, Scott Bessent, had mentioned that, and it caused markets to really rally on up. And you can see that. And actually, what I pointed out today here, you can kind of see. Let me zoom in a little bit more. There we go. Zoom in on this. You can see here that this was initially, I actually sent a little tweet out on this. Little Morningstar pattern had highlighted this, despite the RSI being, oversold. Hey, saying maybe it will find support in here. I think a lot of it might have to do with what happens with news tonight and tomorrow morning, because there was an initial baseline set of tariffs that were 10% on basically all imports, and that was on April the 5th. Boom. Right? And we had the gap down and some moves ahead of that. But April the 9th, which is tomorrow, there are going to be reciprocal tariffs. Now, those are up to 54% on some countries like China. I did notice that there are some, too, that are really quite low in some of the African countries, are about 11% or so. But China getting hit the most, and was reading as well that they're willing to even ramp it up to 104% on China. So we'll see what happens. The whole point is here is there is a lot going on and bigger tariffs actually between now and tomorrow. So be mindful of that. I was hopeful to see this, in terms of a bullish kind of a setup. But in this class, we look at bullish and bearish. But there you go. So wanted to go through that. One other quick note is that 25% tariffs on steel and aluminum products imported globally. That was effective on March the 12th. And some of those companies are actually doing pretty well. We'll take a look at those here in just a bit. But let's go ahead and take a look at the charts here. Okay, so I'm going to pull this back again. And one of the key things we can look at when we think about tariffs, generally speaking, is, hey, what has happened recently? What does the direction of the trend tell us here? In this class, folks, we've been talking quite a bit recently about this potential bear flag setup right here, right? You had the pull of the move coming down. And we said we were looking at some indications. I want to pull up one of those indications that we talked about pretty recently, but there is the pull of the flag. Now, initially, we looked at it, last week, and it dipped, and it jumped actually back up to resistance right about there. And then it actually dipped down from there. So actually very steep decline, as you can see, whichever one of those lines we want to be looking at here. But one of the key levels that we were discussing that can kind of give us a sense, bear flag versus bull flag, either one, we can look at a shorter term moving average, which can be helpful. But like right in this area here, a lot of times what prices will do is they will cross back underneath the 10-period moving average. I just want to show you this because I think it's a really great time to kind of highlight something like this because you just don't get it every day, when the market's going to pull back. In fact, we've been waiting for quite a while to see this. Let's really ramp this up so we can see it, though. But I'm just putting on a 10-day moving average, which, as you can see, can do a pretty good job of maybe providing a timing mechanism for the possibility of that follow-through pull of the flag, right? The flag coming down, the bear flag. Question is what were prices doing right in there? You can see if I really zoom in now, we dip below that level. The funny thing is we came right back up to it. I think we closed just slightly above it, and then we gapped down below it again. So what we had kind of brought up to a degree, and I talked about this, I think even more in my markets and sectors class, is that we did actually have a lower high right there. And as soon as you broke this low right there, right here, that in fact was a boom, a lower low. So the flag pattern setting up, but then a lower low and a lower high within it as you're breaking below the 10-period moving average. So that's ultimately what happened. I did want to review that because that's what got us going. We just had no idea we'd drop that much, but here we are again, and we'll see what unfolds. But a quick note too, just because we do a lot of this, I'm going to go ahead and measure for you right now. Just while we're here looking at it, let's go ahead and take some of these lines off. And I'm going to go down to the bottom right-hand corner of the screen, click on my drawing tools. To the right here is the Fibonacci extensions. Really fast and easy way. If you want to get a full 100% retracement, say for example, I'm going to even put one here just for the heck of it. Look at this on my little drawing. See that? Where was the 100%? I got close to the drawing. I wasn't spot on, but I was about right there in the estimate, okay? That, all it measures is the pull of this move up to this high, measured back down to the 100%. Now let's do it on price, and I'll show you what we've got. We'll go to the high, click on it one time, down to the low, click again. It's actually 3 clicks. And pull it up to the next high. You can see we far surpassed the 100% retracement of, or you could say target of the bull flag. In fact, look at that. We broke all the way down to that level. We dipped even further. So we went to 138. So it's actually, you know, there's just a bigger move in place here as well, which is, it's a little bit of a negative sign. All right. Well, I spent enough time on that, but I wanted to do that because I think it's important to kind of review where we're at after the situation and what might we want to keep in mind for tomorrow, because the trend is down. We got a little bit of a bounce, a little bit of recovery. These are things we need to keep in mind. What did this do to the sectors? Boom. Okay. They all dipped lower. Even the defensive sectors, the 2 key ones we were focused in on for defensive, staples, lower low, lower high, short term. Now there could be some support down here. We'll have to wait and see on that. And then also healthcare. What's interesting is these 2 defensive sectors seem to be still holding some interesting volume associated with them, but we'll see what does unfold with that. I mean, the buyers are still holding on, it appears, relative to some of the other stocks that are out there, some of the other stocks in these sectors. By the way, look at energy real quick. Huge breakdown right there. All right. Well, we are going to take a look at a bearish setup initially. And so let's do that first and foremost. It is going to be on ROST. Let's go through it and talk about it. Okay, so with Ross right now, Ross Stores, you can see that we've got some lower lows and some lower highs unfolding here, right? Pretty clear. Lower lows, lower highs. And we're going to flip this upside down again, as we like to do, just to show you how that kind of looks like a bull flag. Although it's not a bull flag, it's exactly the opposite. It's a bear flag potential. You got the pullback, right? And possibly, you know, if it was a bull flag going higher, it's not. And so we're back at a bear flag, and that is our dip right here. One of the interesting things I'll note is we did get past earnings here. On this rally to the upside, we couldn't hold the 50 level on the RSI, so we saw some weakness in here. And if I really narrow this down, let's just focus in on that key area that we always like to look at here, which is the flag position of the flag, right? And the formation of the end of it. Here is the high of this move. Did we close below the high of the low day? We closed below the low of the high day. Sorry, closed below the low of the high day of the rally we did. And sometimes that can signify a pullback. Now today, what else are we getting? Maybe a little bit of a bearish engulfing pattern here. The body of this candle encompasses the body of the previous day, which can mean sometimes a coiling formation and the possibility of a pullback to the downside on a shorter term scale. Okay. A quick note on this, I want to hit a couple of indicators first. You'll notice that volume over here on this rally was incredibly weak. Let's just do this again. I'm going to keep it here. Okay, so the rally to the upside. So keep in mind, we've got the pull coming down. got past earnings. Now we're rallying to the upside, and then volume just fades. This is ahead of the tariffs too, right? Like, we didn't see any of the tariff announcements specifically, and the markets weren't really responding to it much, but there was no volume here. And then we started on the pullback days. Look at the volume. It started to spike up again. So the volume is actually getting weaker too, right? And look at the money flow. Okay, because what are we seeing on the money flow line, right? And the money flow looks to net out buyers versus sellers. Money flow lower, right? Distinctly lower. So collectively speaking, we might get what we're seeing over here, and what this is telling us is that on down days, the volume is higher collectively, cumulatively speaking, right? It's not over a 14-day period. It's not anything short like that. It's over an extended period of time. It's making a new low. So a lot of times when that's the case, that tells us, according to money flow, that we should break the lows here, right? We should at least break the lows. And what would that be? That's a T1 target to the downside. So I'm just going to draw this up again because I don't know. I'm much better at looking at things to the upside. I guess I'm more just bullish in nature. I like to find the bulls, but there you go. Right? It's the flag pattern itself. We're just focused in on that area right there, and that's what we're seeing right in here. And it's just getting weaker. And so if you get the volume coming in right there, that's where money flow is saying we should at least hit that level, which is the prior low range. 120, where are we at right now? 126. We're still selling. I think when I started looking at this, we were around 128, but it's coming down a little bit. So let's look at that level right now. In fact, I'm going to zoom in on that so we can just kind of highlight this. And a lot of times if I'm looking at that level, notice we got a number of different touch points here. What I think some traders will do is they might choose the one that's the most common. Like, for example, here is, you get the low of this bar right here, the closing price, very much the low. You get the low here and kind of the opening here. That's about 123. So I'm going to have an initial target set up, and maybe we could just do this target initially at 123. It's at 126 right now. Now, this is putting in a short position. So what does that entail? It means we're selling the stock itself, selling short. Okay, so, and I read that disclosure earlier. Let me just quickly hit it again because there is some information in there for you. But short selling is an advanced trading strategy involving potentially unlimited risks and must be done in a margin account. Okay, I have a margin account set up. It's in paper money. I can't actually use this account. I've got to go to my margin account in paper money because I'm just using the demo account here. Similar, but it's not the margin. And with that, there's no guarantee the brokerage firm can continue to maintain a short position for any period of time. Your position may be closed out by the firm without regard to your profits or loss. So there is potential for unlimited loss here, right? Because here's the thing: there's no limit to the upside as how high a stock can go. So we're just going to put in a trade in here down to this level, okay? And then we'll look at a potential stop if prices come back up as well. But we're going to have a target and stop in here. Let's switch on over right now to our standard paper money account. And we'll pull this up right now. So ROST. All right. Now, let's go ahead and take a look at the chart. Oh, it took a second. Okay, let me get some of these off. Sorry about that. We'll just pull off the pivot points. Boom, there we go. Okay, so that is the chart. That is not a daily chart. That is a daily chart. And now we've set this up again. So it's got to be in a margin account to do this. And we're just trading it down to this level right here. Okay, I'm going to go ahead and put a moving average on here so we can see it. Now, this is going to help us in terms of a potential exit. I just want to get it in place so you can see it. Actually had one right there. We'll pull it up, change the color, and good to go. Yeah, show study, perfect. Okay. So that is our 10-period moving average. Okay, Let's set up the trade right now, and notice one other thing before we put it in, because I'm doing an one cancels the other order, OCO bracket order here. If we're looking at the potential for a move to the downside, I'm going to go ahead and just put a little oval in here, just kind of highlight this range right about there as to what we're trying to cap. Well, it's actually about right there. So that is the initial target if we wanted to go with that. Now, obviously, there could be a much bigger target in store. There are, I should say, a number of different flag patterns. Sometimes if you look at a weekly, it's all the way over here, flag back up, and then down again. But that is a very, very short move to the T1. Sometimes we can look at this. I'm going to kind of set, I'm going to go ahead and put one of the target here at this level so that we can at least get to that point. But because the potential return is so small on this, for this target, we also want to maybe potentially use the 10-period moving average. So if prices actually trade back up above the 10, that could be an exit. So it's really just this range right here. And I apologize because my other drawing tools are not working. So I'm relegated to, well, the Thinkorswim drawing tools. That one's not very colorful. Let me just get some color into some of these. In fact, I'm going to change this right now. By the way, if anytime you want to set this to default, so I don't have to keep redrawing, you just click on that color, and every time we draw it, that's what you'll get. So there's kind of like the exit, but here would be kind of like the target. The target is slightly larger than the potential reward, a little bit bigger than the potential risk. But that wouldn't necessarily have to be the case if we wanted to choose a larger flag, pole, I should say, the pole of the flag. In fact, if we were coming over here to use this, which is the initial flag we're looking at, how does that set up? We're taking it to the highs here. Well, you can see that that's going to put us at least down into this range here. So just kind of eyeballing it, the additional target could be somewhere down here. I'm going to quickly go down here. Let's get these a little bit more exact. So we've actually got this high off the flag. Yeah, clicked the wrong one, sorry. Let's go right here. It's the Fibonacci extensions. We'll click right there. We'll pull it down to that low and then to this high. So it's a little bit further. It's about 116. Let me just extend this a little bit lower here. Activate that drawing and pull it down. So that's the T2 target of the flag to the downside, right? If we were selling short this position. All right, the T1 much, much closer. If it does break through that sharply, well, some might say, well, maybe just let it go down to the next target or watch it and then still keep a potential exit around that moving average. We've got to move that. Let's bump that moving average up a little bit. Is that the one I've got? I think it is. There we go. I think I actually had the 9 in there. There's the 10. You can see it, but it's right there. So that can still act as a potential exit level. All right. So there we go. Sometimes these flags can go very, very quickly to the downside. But yes, this one did have that money flow divergence, which was giving us some indications. I'll put it back up because I did lose it. Or on balance volume, we could look at either of the two. They basically do something very, very similar. There you go, to the downside. So, got weakness here. The RSI wasn't holding. Let's move over to the trade tab and place the trade. All right, so we'd normally be over here on the ask side. I'm going to go to the bid side. And we're going to put in or let's see. I guess it doesn't matter. We just got to sell custom order. All we got to do is just verify it. I'm just right-clicking on that, but you can see we're just confirming right over here that what we've got is simulation, not a real trade, right? Here is Ross Stores. I'm going to set this up as a 50 share. I'm going to go in that main line up top here where we are selling to initiate the position. You can see that our potential stop orders, right? Those are listed in green. They were buying back that position. And again, we profit when the price of the stock goes down and we try to buy it back at a cheaper price than what we're paying for it. Okay. The initial target we'd set in mind was about 123. We said we might be able to adjust that. And then we zoom back over here. This was, I think, about 128.80 or so. Okay, so here we go. So let's go for our stop in case it goes against us, 128.80. Tab through that. Okay. So we've got that there. I'm going to go ahead and put on, let's see. We'll put these as good till cancel orders. Let's take a look at our confirm here. Just confirm what we've got. Selling ROST. And there you go. Those are the two buybacks. We'll take a look at it on the chart here as well. All right, so this one took a little bit longer to fill. I don't know. There it goes. Okay, so there you have it. So that lined up very nicely here, and they both lined up. So there are our bracket orders right there. It's pretty busy in there, but hopefully you can pick up on that. I'm going to leave some of these lines in here as a reference for us so we can take a look at it earlier. Now, I was initially looking for the possibility of doing an option trade here. In fact, up top here. But the problem was, even though it's got 2 million shares traded, what we've seen with these tariffs, and this stock just in general too, I mean, the liquidity is not that great. This was the best contract month for sure going out in May. I'm coming over here. Look, we'd be over here on the call side if we were doing, let's say, a short call vertical, for example. But look at this. I mean, that's a 60-cent spread right there. Okay, that's pretty wide. And if we were spreading that out, I mean, over here as well. So it just wasn't as favorable, I mean, in terms of some of the spreads that we like to see in this class. Okay, so that is our bearish trade. Got it underway, and it does, if you step back and look at it, it does look similar to what we're trying to show you here in that diagram. All right, now a lot of companies actually out there are looking so similar to this. It's just ridiculous how many companies. It's just due to the general pullback that we saw in the market. There are some too that could be setting up, like so many companies look just like this. They've come down and made a new lower low, kind of on a bigger scale, past a 1 month time frame, lower low. You can see the flag over here, but there's the possibility of unfolding into a larger flag. But the vast majority of these folks, the vast majority, have earnings just like into the next week or two. So that's something to really be mindful of as we're heading into that earnings season. But like, say, for example, Royal Caribbean, it's not there yet. But I mean, if we come over here and we look at that full extension coming down, where does that put us? There's the pull. There's the flag we're going to pull it up to right here. Boom, right there. There still could be an extension. In other words, what we could see is the possibility of another little flag over here. I don't know what that's all about. Okay, another little flag pattern over here, and the possibility of it rolling over again. So this is one that we need to keep an eye on. And what I'll do is I can put a trade on during our session. Not during our session, but during the week. In fact, if that does unfold. If I take off those lines, do you see anything interesting over here where we might find a resistance level? Maybe at a big round number too, right there. So if in fact this is flagging, because sometimes you get those mini flags inside of a longer term flag pattern, which could take us down to, as I said right around here, 200. So if prices were to go up like this, just, tick up over here like that, and then roll over, that could be interesting. But a lot of these do have earnings, and that kind of puts another kind of a tight situation in play here. By the way, on this one, but notice the money flow held strong. We made a much lower low on the stock, but we didn't see the weakening. In fact, when prices were dropping here, do you see how light that volume is? Let me show it to you. So light. Well, that will filter right into, factor into this money flow line, because it's adding or subtracting that volume on the move down or the move up. Okay, so there are so many like this out there, just tons, because it just generally matches the general market position. This is one a little bit different, as we can kind of veer off into some of the other areas. Before I go into the bullish side, some stocks have been really showing some good strength and the possibility of breaking higher. This, though, as we look at this as a flag pattern, notice the volume has really held up really quite well relative to prices. Prices have held up okay too, but that's not so much a flag pattern because on the flag patterns themselves, we're looking for prices to still hold up on the 50% level. Okay. So let's move into the bull flags. But as we do that, generally we're looking for more strength around the 50% level, probably like right in here or higher for then to draw a flag. So that was not quite there. It could be setting up, but just not there yet. Now, getting back to the tariffs, as I mentioned, and kind of thinking in terms of tariffs, before I hit the bull flags, just a quick note, look at United States Steel. I mean, that's right at this very, very long-term, interesting level, possibility of a breakout right there. Look at the volume on that day. I mean, that was the stock to be in yesterday, right? With the 25% steel tariffs that have been in effect for a while, but it really responded nicely. If I zoom back out a little here to a 2-year, you're going to see that this is actually a long, really quite a long-term level of resistance here for steel. Now, sometimes what I think is interesting that you can do when you're looking at these sorts of companies, if they're breaking above resistance, it's very, very rare that a stock will just break out and just rally and just keep going. It doesn't happen nearly as much. What generally tends to happen, I'll zoom back in on this. Oh boy, by the way, I just noticed, yeah, it's kind of a cup and handle, isn't it? Sort of. Well, it's more of an inverted head and shoulders pattern, which could give us another target that we would look at as well, which actually, I'm just picking up on it now. Do you guys see that? So it's like a shoulder, head, and shoulder here. Shoulder, head, shoulder, possible breakout above the neckline, and that neckline is going to be right here, coming on down off that high to that high roughly. So you're breaking higher here. So a break above the neckline. Oh, let's see. I wasn't expecting doing this, but I just saw it here. I'm just like, that is an inverted head and shoulders pattern. I was more looking at like this level of resistance and the possibility of a flag pattern kind of forming here, which a lot of times can happen on these breakouts. You'll see it flag and it might extend higher here, but this actually gives us a totally different target level because we're measuring this range between this high and that low. So if I eyeball it, I'm just going to show it to you. Go in yourself and make get the exact parameters on it. But the distance between the high to the bottom of the cup. Oh, I'm sorry. I'm used to doing that, but I've got to add it actually at the breakout. So it's just not as high, but it does take us over these sort of longer term highs over here. Interesting. Look at that. So it does take us above 50. 50 might be one of those big round numbers. Notice over here with 50, that was the high, at least the 2-year high that you've got as well. So this could be one developing with some of that tariff information. I wanted to hit this, like I said first, but be watching for the possibility of a flag developing here. It's one I'm going to have on the watch list for sure. And actually what I want to do is just right click on it right there and put in a custom alert. And that would be at or above. I'm just going to put in here, breakout, and then potentially flag development. Click create, and we've got it. So we can text that information. Again, you can set that up in the setup box up top here, and then just go into application settings and notifications to do that. But that's one, hey, that's tied into tariffs. I noticed though, I didn't see this like in NUE, Nucor. Wow, totally different. Nucor, that's steel, right? That's a steel, but it just didn't break down. Now maybe it's going to be a laggard. We don't know. Maybe it can come back eventually. But take a look at that. That's lower lows and lower highs. It's all within that steel group. Yeah, I just barely saw that inverted head and shoulders pattern on X as well. So there you go. It's really kind of hidden there. But sometimes you'll see those on the breakouts. But shoulder, head, shoulder, breakout, and if nothing else, the possibility of a flag pattern as well up top, which might have a similar retracement as the inverted head shoulders pattern. Okay, well, let's do this. Let's look at some other bullish plays because we ain't done, folks. We are not done yet. This is one that did incredibly well. In fact, the day that everything did drop, the big drop, I should say, it's dropped for a few days, but that big day was actually a new high for Kroger on the year. And we broke up higher, but you'll notice that Kroger has a little bit of the same pattern going back for quite some time. Again, we're talking defensive in a sense, more defensive. I thought about the tariffs, and they probably don't import too many products from, let's say, for example, China, for example. They wouldn't. You wouldn't think. Maybe there's a lot of made in America product at Kroger. But there's the possibility of an additional bounce here coming higher because that's been kind of the history. So one of the things we could look at here, although today's not looking great, it's just a tough day to look. In fact, it's been a tough week to look at upward moves in terms of flag patterns, bull flags. But that's bearish engulfing right there, and that is not a positive. Earlier today, it looked like it was going to engulf, or at least close above the high, the low day, maybe like it could hold, but it's not showing it's going to do that in the next little bit. So that's one, but this group in general has these extended strong upward trends with some decent support behind it, and that's something that can be watched. One of the things on these I think that is really helpful to do is take a trend line, draw it off the bottom. As long as we're still trading above that trend line, I mean, we're getting higher highs, we're getting higher lows. Money flow, boom. I mean, that hit an all-time high right there. I mean, I'm sorry, it hit a high with the high in Kroger. Don't know if it's an all-time high. It appears that it's an all-time high. Did it hit on the tariff day of the tariffs? Okay, so that's one to watch. We're going to be watching this week. Now, one of the things too is we talked, when we look at this and I pull in a simple moving average to a 10 right here. Let's pull it up and we'll click OK and apply. How are we doing on that 10-period moving average? Notice we didn't get above it. We bounced off it. And we came very close yesterday too. A volume kind of waning a little bit, but really kind of the signal that a lot of traders might look for is what's happening right here. You closing above it. You weren't able to get above that level. Boom, you got right above it. Off a bounce. Over here, you got above it right there. Look at this consolidation. It took a while on that consolidation, but ultimately, we did get above it right there. When we broke back below, we got above it right there. And then these are really kind of marking sometimes the moves. And that's where that 10 can be effective. Let me just show you a couple more over here as you kind of plan out, or as you might be looking, I should say, at some of these moves that are after the pullback. Where's the confirmation come at? We talked about the hold. We've talked about trend lines coming down as well, right? To hit another key one, but those moving averages as well can be very interesting. So there are three right there you can look at. The close above the high, the low day, a moving average crossover, as well as a trend line break. Not to mention any candlesticks that might be forming at the bottom as well. Those are three key ways to look at that flag setup. Now, EXC, Exelon, trending higher. Now, this company is, I believe, yeah, it is. I think it's a utility services company. So some of the utilities have been bouncing. Initially, when I saw it, I thought it was energy, but it's actually a utility company. Strong upward move. In fact, you had a really good gap to the upside here. But again, notice challenged right there at that 10-period moving average. That's really kind of a make it or break it for a lot of traders, investors. Look how well that 10 did over here. Did we ever close back below it when we got back up above it? We did initially right here. So we got in. You closed below it right there. But then you broke back up above. You extended higher above the range too. And that one really went on for, well, I don't think we closed below it right there. So a few months later, as you can see right there, there's your pull up all the way to that point, captured that move. Now that's off the bottom. I didn't see a bull flag there at all, but I would say I saw a bull flag right over here. Let me see if I could draw it right there to there. Okay. It was actually really important too because it was breaking a resistance level here as well. So that was interesting, but it held that 10 period the entire the entire time. Okay. So let's see. Yes, there are some companies. Oil was different. ExxonMobil, oof, big sort of a bearish engulfing pattern right there too. Can you see where the resistance is at on some of the oil there? Oh, right there. 105-ish. We just hit it, engulfing right there. We didn't even really get much of a bear flag pattern, but it was just a one-day big move up. If we were looking to potentially look at some of these bear flags coming down, that's what it would look like right there. That's a very, very quick flag. Normally you're expecting to see 2 or 3 days, but in volatile markets can be all over the place. But honestly, if we were drawing this out, it would look like something like this. Right to resistance, back to resistance, and then a pullback there. So interesting that it be noted in the chat some of the oil. But oil really, really getting hit pretty hard. Be mindful, folks, of all the earnings that are coming up here that can factor into it. But I think regardless of the situation that we're looking at in terms of some of the swing trades, we can just sit here and be patient right now and wait for those correct setups to unfold. I think one thing is I'll just kind of say in summary here is if we're looking at the S&P 500 and we saw kind of its situation here, if it continues to show weakness, well, the market has been such a huge undercurrent, you could say, for so many companies. There were a ton of stocks that we were looking at that we were actually positioned in that we got knocked out in this class. Well, there were two, but I mean, say for example, like SO, for example, still, somewhat interesting. It was right up towards highs on the possibility of breaking out, but the tariff information broke it down, right? In terms of SO, dipped really sharply. The market has so much to do with so many companies. There's just very, very few that have been able to sustain sort of that major selling pressure. You can look at certain things like we talked about today in terms of steel and others, but I wanted to throw that out to you today. Keep a watch on that. It's very, very volatile. When the market is as volatile as it is, just give it time to develop until you get just the right setup. I think it's important to be really, really picky on these setups. So if we're looking at bull flags or bear flags, just really, really wait for the initial setup to occur, right? And then get the signal. That's what we've done previously in this class, and we've been very, very careful with that in terms of the swing trades. So some things to keep in mind, but it's not to say that you can't use a lot of the tools that we discuss in here. Short-term moving averages, trend line breaks, closing above the high of the low day. Those sorts of things can help us navigate this market in all this volatility. But those are some key points that I wanted to kind of address with you today. So folks, we got a short trade under our belt today. We put it on, and Ross Stores, we'll see how that does unfold with the market. And just keep a big watch on what we mentioned with the tariffs for tomorrow, all those extended tariffs that had been mentioned to be coming out, really extending way beyond the 10% baseline tariffs. So reciprocal tariffs is what they're called. All right. On that, hey, really appreciate it, Cam, very much. Your help in the chat. Folks, it was good being here with you today. Hopefully you got some good insight. There was a lot going on in the markets, I know, and really just keeping an eye on the news information and what's unfolding with the tariffs. Tying that into the markets can be so helpful. We'll definitely try to do that in our Wednesday class coming up on markets and sectors. Got some more details for you there. But folks, smash that like button if you would, as well as subscribe. Do that in the bottom right-hand corner of the screen. It's awesome being with you. Look forward to future discussions. Have a great day, all.